Hi everyone, welcome back to my YouTube channel. Today I wanted to talk about what's happening in the stock market, why the stocks are going down, and what was my opinion about when it's going to turn around. If you pay attention, you'd know that the stock market is down about 23-24% since the beginning of the year. Here you can see from December 28th to June 17th, S&P 500 dropped 23%. If you watch other YouTube channels, you may notice that quite a few portfolios are down a lot. Many of them are in red. I like to watch Joseph Carlson YouTube channel, and I noticed yesterday he released a video and his portfolio is down $5,000. So he's actually in red on a total investment of around 300,000. I'm actually doing fairly well compared to that and compared to the S&P 500. I'm only down about 10%, so I'm still up almost $80,000 in profits on a little bit more than 200,000 invested. So what is driving the stock market down? Well, to understand that, we need to step back a little bit, a few years to the beginning of the COVID. When COVID happened, governments around the world started printing a lot of money. Just to give you an idea how much money was printed, here's one article I found that 80% of all US dollars in existence were printed in the last 22 months, from the 4 trillion in January 2020 to 20 trillion in October 2021. Last year we wrote a piece titled 40% of US dollars in existence were printed in the last 12 months. One of our most popular articles. On January 6, 2020, the US Federal Reserve had around $4 trillion. However, a lot has changed since then. The Fed has accelerated its quantitative easing, widely referred to as money printing, to increase liquidity of US banks and inject trillions of dollars into the economy. As of February 2022, the US inflation hits a 40-year high, rising to 7.5% in 2021, as Federal Reserve continues to print trillions out of thin air. US is now on a path of 1921 Weimar Germany. Now, to make you understand what that means exactly, here's a picture of the lady in Germany using German money to heat her food. That's how they devalued their currency, by printing it, tons and tons of it. The money became worth less than the paper it was printed on. That's how bad it was. Right here it says, in 1914, the exchange rate of the German mark to the American dollar was about 4.2 to 1. 9 years later, it was 4.2 trillion to 1. The Fed's addiction to money printing has kept the party going for the Wall Street while fueling inequality. Today, the stock market and cryptocurrencies are at record highs, while income and wages remain almost the same. The Federal Reserve continues to print more money, further devaluing the dollar and enslaving millions of Americans. Now, a little over a year after our last piece, the Federal Reserve has updated the numbers. Sadly, it's no longer 40% of all US dollars that were printed since 2020. Not even 50, not even 70%. Since January 2020, the US has printed nearly 80% of all US dollars in existence. To understand the magnitude of the Fed money printing, we need to go back 22 months ago. At the start of 2020, there was $4 trillion in circulation. On January 4th, 2021, the number increased to $6.7 trillion. Then the Feds went into overdrive. By October 2021, that number climbed to $20 trillion in circulation. Here's another interesting graph that shows you exactly what's happening. This is called M1 money supply. And you can see that since 1960s, the amount of dollars increased steadily, which is kind of corresponds to 2 to 3% a year inflation that the Federal Reserve wants to happen. Around 2008, it started to increase slightly more because that's when financial crisis happened. But look what happened in February 2020 when COVID hit. It literally went from $4 trillion to about $17 trillion in a matter of months. And it didn't stop there. They just kept printing it and printing it and printing it and printing it, which means now we're sitting at almost $21 trillion. Well, you can't do that without any effect whatsoever. After all, if it was that easy, everyone would be doing it. Besides Germany, we can look at other examples of what happens when a country does that. For example, Zimbabwe tried to do it. Well, you can see the result. This is a $100 trillion bill. Sounds like a lot, yet it's not enough to even buy a loaf of bread. And right now, same happens all over the world. And this is the effect it had on United States economy. You can see that for years the inflation was around 2%. Then in 2021 it hit 7%. And in 2022 it's projected to be 8.6%. And it keeps climbing. Because don't forget, the year haven't ended yet. And the US is not alone. This is happening all over the world. Some of you may know or heard the financial crisis that Sri Lanka is going through. Currently, their inflation is close to 40% and climbing. And their new president actually recently said that he has no choice but to print money to pay government workers, which means it's just going to continue going up. Pakistan is not far behind from Sri Lanka. They're facing lots of difficulties as well. But the one major difference is Pakistan is a nuclear armed country. And because of that inflation, US government had no choice but to raise their interest rates. You can tell that people had too much money because of all the things that they're starting to spend money on. For example, Bitcoin went up from $13,000 all the way up to 72, which is basically an increase of 432%. I'm sure it had to do with all the money printing. And other things became popular as well, such as NFTs, even things like real estate inside the metaverse. Virtual land rush is driving up the cost of space in the metaverse. People spent $500 million buying a virtual real estate. And the trend estimates that there will be worth more than $5 billion by 2026. I actually like Bill Gates' take on it. Bill Gates says that crypto and NFTs are 100% based on greater fool theory. What does that mean? That he thinks there is no value behind them, that it simply goes up in price because somebody's buying it, thinking that somebody else will be willing to pay a higher price for it. Is it true or not? I kind of agree with him on this one. A lot of people bought bitcoins and cryptocurrency in general because they thought that it's a new gold, that it's supposed to protect them in case of high inflation or stock market crash, kind of like gold being safe haven for centuries. Well, this is not seem to be happening. If you've been paying attention to Bitcoin prices, they crashed a lot. Basically, they lost 70% of its value. That's not what safe haven's supposed to do. On the other hand, if you look at gold prices, they didn't really move that much. Here we can change it to 6 months, and we can see. And the rising interest rates are not the only issue that companies facing today. Another major thing is rising gas prices. Contrary to what many say, oil been rising in price for the last year. It didn't just happen because of the Russian invasion of Ukraine. That simply added more to it. For years, many investment firms were avoiding investing in oil companies because they were considered to be dirty, not cool. Everyone wanted to invest in renewables, and they were treating oil companies like some sort of infection that had to be avoided at all cost. Because of that, a lot of money moved from oil companies into renewables. Oil companies had no choice but to cut down on their expenses. They were shutting down oil rigs, they were shutting down refineries, and this is what we're seeing today, the effect of that. I found one interesting article. Will any new refineries be built in the United States? Chevron CEO Mike Wirth does not expect another oil refinery to be built in the United States ever again due to federal government policies. The last significant refinery built in the United States was in 1976. A small refinery came online in 2020 in North Dakota. Over the last 2 years, due to reduced demand from the pandemic and President Biden's stated policy to reduce the demand for petroleum products, U.S. refineries have been shutting down or repurposed to become biofuel refineries. In a business where investments have a payout period of a decade or more, it is unlikely for investment to be spent on policies where the demand is to be reduced. Wirth stated rhetorically, how do you go to your board, how do you go to your shareholders and say, we're going to spend billions of dollars on new capacity in a market that is, the policy is taking you in the other direction? And this is the result we're seeing right now. Because of that, I think oil prices gonna stay high for a while. And the reason I think that also is because I noticed that Warren Buffett been buying Chevron and Occidental Petroleum. For those of you who don't know, big funds require to disclose their purchases and sales. Basically, any fund that spends more than $100 million required to file F-13 forms, which basically lists all of their purchases to the government. And that information publicly available. So here I found Warren Buffett's company F-13 filings. And you can see that in the last quarter, he added 300% to his Chevron shares, as well as 61% to his Occidental Petroleum shares. So the total now, he owns about $38 billion worth of oil companies. I don't think he would be investing in them if he didn't think they have some sort of future. Since we're talking about the F-13 filings, this is something I like looking up once in a while, just to see what other well-known investors are doing. Another person I like looking at is Ray Dalio. He's investing a little bit differently than Warren Buffett, but I like looking at both because just like everything else, I like getting different ideas and being more diversified. So if you look at what Ray Dalio owns, so his number one stock is VWO, which is Emerging Markets ETF. If you watch any of his videos, he's very bullish on emerging markets such as China, India, because for a long time now, those markets been growing at much higher rate than United States or any other Western countries. So his number two holding is Procter Gamble. That's one of my favorites as well because they basically make products that everyone's using no matter what. They make soap, they make toothpaste, laundry detergent, shampoo, and even during recession, you're not gonna stop brushing your teeth. Number three is also Emerging Markets ETF, just a different one. Number four, the same thing. Number five is S&P 500. Number 6 is Alibaba, which is again Chinese company. Number 7 is Johnson & Johnson, again very strong company. They basically produce pharmaceuticals as well as a lot of medical equipment, which if you think about it, even during recession, people still getting sick, they still go to the hospital, and it's being used. They've been paying dividend, not just paying, but they've been increasing dividend for the last 63 years, same as Procter Gamble. And the list goes on. Coca-Cola, Pepsi, Costco, Walmart, all those companies should do very well during recession. If you think about it, Pepsi, for example, they make soft drinks and they make snacks. People gonna buy snacks even during the recession. Walmart, well, Walmart sells lots of things for cheap price. Groceries, cheap clothes. Well, if there's a recession and people don't have money, they still need to eat, they still need to get clothes, so they're gonna go to Walmart instead of some expensive brand store. So what am I doing? Well, I have sold one of my stocks recently, my oil stock that went up about 208%. So I took out profits. For now, I am trying to build a cash position, 5 to 7%, and watching the prices. I really don't think that this is just a small dip because of all the things I mentioned before. The high gas prices are not going anywhere, I don't think anytime soon. Inflation still accelerating. And now added to that, Federal Reserve increased interest rates, which will affect companies later down the road. Because now a lot of the companies that were taking out money to finance their expansion, they won't be able to do it as easy because it's going to cost them a lot more. And so I believe in another 2, 3, 4 months, we're going to start hearing the profits shrinking even further, which will bring their stock price lower. But I am watching a number of companies that I would like to purchase if they fall even more in price. And I'll give you the list. One of the companies that I'm watching is Target. And I will probably start buying it if it hits $125. Because Target is similar to Walmart. It sells things that are fairly cheap. And during the recession, that's where people are going to go to buy things for school, for their kids. Obviously, Procter & Gamble is on the list as well because it's pretty much a recession-proof company. No matter what, people just can't really do without their products. If it hits $120, I will start buying it. Another company that I'm interested in is JP Morgan. I'm looking at the price of $100. If it drops to that, I'm going to start buying it. I'm also interested in Pepsi. As I mentioned, they sell soft drinks, they sell different snacks, and I believe they should do well during the recession. Obviously, the list couldn't be complete without Johnson & Johnson. They have a lot of cash, they're a very profitable company, and their products will be used during recession as well. I'm also very interested in buying more Microsoft. And even though Microsoft did pull back about 25%, I'm still waiting for it to pull back even more. I believe it will drop down. And if it hits about $200, I'm going to start buying it as well. And the last on the list will be ADP, which stands for Automated Data Processing. Here's a little bit of information about this company. Automatic Data Processing is an American provider of human resource management software and services. Basically, this company does payroll for other companies. The reason I found out about it is actually because the place where I work started using them. And I like researching about different companies, and I started reading about them. And they're also on the Dividend Aristocrat list. They doing very well. They did very well during last recession, and they increased their dividend quite a lot. Because of that, I bought it 2 years ago when COVID hit and their stock went down. You can see right here, their stock went from 180 to 112, which made no sense whatsoever because unless the companies go completely out of business. They still need to pay their employees. They still need to process all this data, and that's what ADP does. So I did buy it, probably, well, somewhere around here, because currently I'm sitting at around 60% profits on it. But if it does drop to 145 or so, I'm gonna start buying it again. I hope you like this video. I would really like to know your thoughts on what's happening in the stock market, where you see it's going in the next 3-4 months. I also would like to know what you think about the companies that I'm interested in. If you like this type of videos, please click like button and subscribe. This will help me with promoting my video on YouTube. And I think that will be it for today.